Thursday, April 6th, 4:42 p.m. New York time, U.S. stock markets close. The week just finished because tomorrow, yes, is Friday, but it's a holiday, so U.S. stock market is closed. So it's not your traditional full 5-day trading week. Nope. But we're still looking at the weekly charts. When I say weekly, meaning each candle represents that current week. And we're looking at the Dow Jones Industrial Average versus the 30 individual stocks in the index, which happens to be the 30 largest United States publicly traded companies. So here we're looking at a 1-year grid of data. Each candle's a week. We closed green, made a higher high, higher low than the last week. And we're still below the low of the year. So this big sell-off back here, it's a retracement. Let's actually extend this out to 3 years. Yeah, look at 3 years. We're below the high of last year as well, too. So we're about midpoint, no, above midpoint, the range of last year. Yeah, it's pretty much a big consolidation here. Building energy to go higher. Now let's go look at those 30 stocks individually. Right off the bat, Apple made a new high for the year. Outstanding new high for the year. Performing better than Dow Jones Industrial Average. But they both did close above the high of the prior week. That's good. Let's open up and look at the stocks individually. That's nice. Yep. So Apple's strong like bull. Look at the past 3 years. Well, Apple's still below the high of last year. Yep. Again, it's definitely proving itself to be better. Next, Amgen. It's good. Closed green, above the high of last week. Yeah, still below the high of this year. And below the high of last year. Big turnaround there. That's looking good. Let's keep it short on the 1 year worth of data. Next, American Express. Closed red. It did make a higher high than last week. It rejected it. Big sell-off. Big solid body. That equals a very bearish. It's also in this consolidation pattern. Below here. Yep. Financial institutions. Garbage. Losers. It's one of the weakest sectors, if not the weakest sector. Don't be investing in them. They're not leadership yet. Boeing, okay, made a higher high, higher low than the prior week. And then huge wick on the top. Big distribution, closing below the midpoint of its own candle. That's bearish candle. Huge consolidation here. Has not been done much. Nope. It's building calls. But again, look at Apple. It's beautiful. Apple, trending. Momentum to the upside. Clear trend. First Boeing, massive consolidation. Leadership, Boeing, not. Leadership is Apple, technology. Caterpillar, new low for the year. Loser. Oof, huge bearish candle. Problems. It's been occurring for a while. We know that. It's also been doing these staircase pattern lower low. So again, if you know how to trade bearish, trading short, this is one of the stocks to be trading short. If you use fundamentals, then you'd be understanding that when a company has worse than expected earnings, that's bearish, and most people are unloading the stock and not buying, losers. So there's multiple ways to understand who to be trading bullish and bearish. Charlie Romeo Mike, Salesforce, inside candle for the week, indecision. Yep, just shy of the high of the year. Doing better than the Dow index. Cisco, just shy of new high of the new year. Actually, made a new high for the year. Yeah, took out that high of last week and then sold off. It's doing good. Consolidation, breakout, consolidation, breakout, staircase pattern, higher high. Again, technology. Chevron, big gap up. Yep, closed above the prior week. Again, a lot of this has to do with what happened last Sunday. This past Sunday, I showed you, if you follow me. Crude oil futures gapped up Sunday night when OPEC said they were going to cut back production. That's not going to reduce demand. Demand is growing. So you cut back on supply, you could charge more for the product, pump and dump. Not necessarily dump, but yeah, market manipulation. It's just shameful. Screwing the most amount of people by raising crude oil prices because they want to reduce production to have crude oil prices higher, and Chevron's benefiting. Disney, oof, red for the week, made a higher high, higher low. It's very tiny trading range. That's not good. It's doing a retracement of here. It's very suspicious. Might be distribution. Not good. Dow Chemical, same thing. Look at that. Made a higher high, higher low. It's retracing. Yep, I'd be looking for opportunities to be trading bearish on these. Goldman Sachs, yeah, financials, garbage, losers. They love to network with associations to help boost them up, market them. It's not like they're doing great things for the community because they give back or they give some charitable money to a community, these financial institutions. Well, but they're not giving enough love and care to the clients that are making deposits and funding them. Just so shady. Home Depot, massive consolidation down here, very bearish, not looking good. Honeywell, same thing. Look at these. Staircase pattern, lower low, garbage. It's doing that retracement from here. Look for that opportunity to trade bearish. Remember, this month of April, we have earnings because we are now in the second quarter of the year. IBM, oof, they're struggling too. That's suspicious. Big green candle out prior weekend. Look at that. Looks like distribution, so we might get a retracement. Intel, very nice. Higher high, higher low, new high for the year. Looks like a dodgy. Looks like a potential reversal. Sometimes it's also a halfway point. So again, we should actually be getting ready to continue that extension higher. Technology nice. So last week, that big green candle, bullish, huge volume, broke out of this consolidation, very bullish. I'll be looking to buy in the pullbacks. Johnson & Johnson, huge trading range, the biggest trading range for the year, coming off the lows. Wow. Something positive must be happening there. Somebody's buying.